Good afternoon, everyone. This is Joe Henches with Beyond the Chart, and this is an update for Monday, October 7th. Let's take a look at the markets. We're going to take a quick look at four key indices. Then we're going to look at a review of a couple of positions I had, and then look at some stocks that I am watching. So, got to do all this in 10 minutes or less, so need to get going here. First of all, the Dow Jones Industrial Average was up 76 points on Friday. You can see the pullback. The pullback's gotten a little more extreme than I thought it was going to be. So I'm going to tell you the theme, and you've probably seen the headline already, but this is kind of what I'm thinking right now. It's mixed signals, caution flags, okay? So we're getting a couple of things that are coming up here that are a little bit surprising, like the extent of this pullback on the Dow Industrials. We've pulled back about a little over 78% of this up move from late August. So it's a pretty sharp pullback. It's not a rounded over. That doesn't necessarily mean anything. I mean, you know, things can sell off from any kind of position, but we are getting a little bit of a topping formation. This head, shoulders, head, you know, and this neckline across the bottom here. So the fact that the 50-day is now starting to trend slightly downward, the fact that the blue line 10-day has broken down below the 20-day, the fact that this hasn't rallied back up is giving me pause. And so, you know, the last time we had this big fiasco with the U.S. government, when was that? July, August of 2011. So let's go back and take a look. If you look at July, August 2011, do I have it right? Yep, this is it. Okay, so now you see this huge topping formation that was going on between February through July, and then, you know, we had this trend line broken. We had this topping like a head, shoulders, head, neckline, and right here is like the 1st of August. Right in here, you know, this whole thing with all the arguments, he said, she said, the fighting back and forth, and then the huge sell-off panic when the S&P downgraded U.S. debt, and, you know, all of that was occurring. So a similar type topping look to the Dow Jones Industrial Average. So we're a little wary here. S&P 500 isn't quite topping like that. We're kind of seeing a little bit of, apologize for some background noise. It's a beautiful Sunday afternoon here in Dallas, and we got people working on cutting up trees and all kinds of good stuff on the outside. So if you hear that in the background, I apologize. The S&P 500, a little bit of a rising wedge here. Okay, this has come a little bit clearer to me. I wasn't quite sure what this was doing. I think that is a real possibility. It's not the topping, it's not the horizontal trend line topping formation that the Dow Industrials were doing. And you look back to what they did. Again, the thing back in 2011 that I'll point out is all of the indices kind of mirrored each other. Okay, we're not getting that right now. That's why I'm calling this mixed signals. Okay, so you know, this has very much the look of what the Dow Industrials did back in 2011. Well, it doesn't. They're not looking the same here. Let's take a look at the Nasdaq. Now, the Nasdaq, you know, I kept focusing on the fact that we were pushing higher, pulling back, pushing higher, pull back, and, you know, very positive, like we're leading it higher. But in reality, what we're getting here is this rising wedge, and rising wedges are very bearish. Okay. This typically, you'll see this, they call it a rising wedge or a diagonal. You'll see this at the end of a final move, or you'll see them on rallies in bear markets. Okay, so this is the end of a final move. And, you know, another chart that I've got, if I could pull this up quickly, Hewlett-Packard did this year. This was pretty clear, and it broke out of this, it rolled out of it, and it collapsed off, and it's continued to sell down here. So that was one that was a very clear example of a rising wedge, very similar to what we're seeing with the Nasdaq. Now let's go back to 2011. And where am I? This is 2011. The Nasdaq again had this very straight topping formation, a shoulder or head, shoulder, collapsed out of this. So they're all looking alike. We're not getting that now. That doesn't mean anything. I mean, we could still sell off. This is what's confusing, okay? because this is a very bullish type formation to me. That doesn't mean it can't fail, and I've said that before. Another example of a stock that did that is Chesapeake. Chesapeake had a really nice rising triangle, broke right out of it and continued to push higher and went right to its target. So that's why I'm saying we got mixed signals. All right, let's take a look at, I got out of, where's my 3D systems? Okay, I got out of this on Friday afternoon. Took a 1.7%, very small loss, lost $8 on a $470 option. Okay, so basically broke even. Um, and the reason is the stock was slightly higher. See, I got out at about 54.22. I got in at 53.55, 51. But again, you lost a little bit of time premium as you're going sideways. And it had been, I got in right at the close on this day, and I'd been in for 13 days. And, you know, what I've really got is more of a target of a time stop, okay, that I don't really, if I'm not seeing results after 10 trading days, I'm looking to get out. Okay, so I start getting a little bit nervous. I expect to see something moving in my direction within 10 trading days or less. So that's what's happening there. Broadcom, okay, Broadcom is the other thing I wanted to mention. I did buy puts on Broadcom on this day right here at the close at 25.84, closed Friday 26.64. So it's pulled back up some. It did close above the 10-day exponential, the blue line, okay, and so my stop to me when I've got puts or I'm short is if I get another close above this high tomorrow, I'm out. I'm not playing around. I mean, it could close up here, it could close slightly higher. I get a close above, I'm out. And I try to use the close mainly because I've just had too many whipsaws for intraday action. I mean, a lot of times this can come up intraday and they sell off and the close is way down here. And, you know, the close is what matters. So that's really what I'm focusing on. That's what we've got tomorrow. Now, what am I watching? I'm watching about a handful of stocks. Let's look at NQ Mobile. This is a Chinese stock that is just, these China stocks have been on fire, the internet technology stocks. I'm looking for a close, you know, as long as the blue is above the this blue-gray, as long as the 10's of the 20, I get a close above this high right here, I'm going to be looking at buying. We'll have to see how it's acting. We'll see what the options are priced at, but that's what I'm watching. I'm watching that one. I'm watching Apache. I've been very bullish on Apache, waiting for this to let me back in, and it could let me back in because there's a big bottoming formation that's been taking place over the last 12 months. The other one, let's see, we're watching Chesapeake again. Chesapeake looks like it may let us back in. I think I got rid of it, actually. There it is. Chesapeake's gone sideways here, a little bit up, back, and, you know, had this nice move up above. It looks like it might be getting ready to go again for another thrust up. So that's one I'm watching. And let's see, KLAC. Let's look at Qualcomm. Qualcomm's one I'm watching also. I'm a little bit wary about this. It's pulled back, but, you know, a lot of times you get you know, will pull back before they rally. But I am watching this one for a possible buy, and then I'm also looking at KLAC to see how it's playing out. This one's a little stronger uptrend here, and I'm looking to see if this doesn't pop and get a nice close tomorrow. So that's it. That's the stocks we're watching, and have a great Monday, and we'll talk to you a little bit later this week. This has been Joe for Beyond the Chart.